You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tosaw from St. Charles Wealth Management, along with Andrew the Rock Lobster Giovinazzi from OptionFit.com. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Monday. Time to kick off another broadcast week here on the network with a little show we know around the globe as the old OB, aka the Option Block. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which all of you folks are binging these days. If I sound a little bit different and a little bit under the weather, both of them are true. I am still in the Southern studio. If you've been following the weather drama over the past few days, you know there's pretty much been no flights into Chi-Town over the last few days. So all my flights got canceled. So I am once again in the Southern studio. I will be here through tomorrow. So we'll be talking some German fun and Eurozone fun here from the Southern studio tomorrow before I embark back to Chi-Town. Folks saying how you holding up? How's your voice? Yeah, my voice has been better, but you know I will power through. I tried to rest it all weekend, listeners, but you know what? No rest for the wicked. And speaking of the wicked, I am joined here on the show today by the uncleist of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, how was your weekend, sir?
Relaxing and enjoyable as always. It's St. Charles. How can it be bad?
It's been a good weekend to be under the weather shield up there. I hear you had sleet and all kinds of fun up there.
Nah, 80 degrees and sunny every day, all day here in St. Charles.
And then we are also joined by a man who bravely left the confines of his compound a few weeks ago. And now he's happy to be back collecting his bounty of eggs from his chickens. None other than the rock lobster himself, Mr. Andrew Giovinazzi. Mr. G, welcome back to the show, sir.
It feels good. I learned something today. Did you know that there are a lot of black bears in Florida? Didn't know that.
I did not. Maybe I'll look out my window from the Southern studio. Maybe I'll
be careful, Mark.
I know. Now you got me spooked to go outside my door here. I know there's
next thing you know, he's going to start saying there's alligators in Maine.
It's bad enough I got to worry about gators. They're right outside the door of the Southern studio. But now you tell me I got black bears on the other side to worry about. What are you doing to me, Mr. Rock Lobster? You know what? I think instead of talking about that nonsense, let's get into a little bit of 80s nonsense, shall we? With a little bit of the 80s Trivia Challenge. Here we go. All right, everybody. Welcome to the 80s Trivia Challenge, the portion of the show where the Rock Lobster and Uncle Mike attempt to score some points and also mock each other at the same time. And I did not bring 80s trivia cards with me, but I did manage to track down. There are a few sources you can find authentic 80s Trivial Pursuit cards. So I did just that. I have one in front of me right now. I'm just going to choose a color because A, I did not have time to post a poll this morning, and B, I don't feel like it. So let's just go on into the colors. I'll just make sure my chat is up so I could see who the winner is, all official like. All right, here we go. So today's color is going to be yellow, aka history. What country did Ronald Reagan claim was the victim of a Sandinista, quote, invasion in 1980?
Buzz?
Oh, Rock Lobster diving right in. Interesting. Where are you going to go, sir?
The only thing I can think of is Nicaragua.
All right, Nicaragua. Unfortunately for you, sir, that is no. I can see why you would say that. I can't say any more without giving it away. The answer is no. But you're within
the question. He buzzed
you're within
mid-question.
spitting distance, sir. What was that?
Can you complete the question? He buzzed in mid-question.
Oh, he did? Okay, so let me read it again. Hold on. What country did Ronald Reagan claim was the victim of a Sandinista invasion in 1988?
1988. Well, it's not Grenada because that was earlier.
Yes.
That's not Nicaragua, so I'm going to go with Beirut.
No.
A
It's
country?
more of a city than a country.
Away.
More of a city than a country, but
Oh, I didn't know that.
but no, Mr. Rock Lobster, you were close. You were within
Honduras?
spitting distance. It was Honduras.
Yeah.
Honduras was, according to Reagan, being invaded by troops from Nicaragua.
Well, yeah, I know. And I was on the fence on that. How about a half a point because I know the difference between a country and a city?
I was thinking about that.
Just beating up on the 3-time champ. I get it.
It would be a little more forgivable if Beirut wasn't back in the headlines as we speak. You know, we're talking a lot about Beirut and Lebanon right now. So Uncle Mike has myriad opportunities to familiarize himself with the geography of the Middle East.
Only thing I will give him, because he did donate a point to me on the on his
You don't even know what it was, do you?
deeply held belief on that tag team wrestling duo.
He doesn't even know who it was.
Nope, but he got the points nonetheless.
I'll
Listeners,
just
did you
take
know that
the
one? That
points
was a bit of a
and
deeper
totally
cut.
forget about them forever.
That was a pretty hardcore deep cut. As we keep rolling now, listeners, right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
Let's get down to business, a little bit of the old trading block. And business for the bulls today is looking good. Uncle Mike is probably a little bit excited out there today. We are kind of playing that role we've seen a couple of Mondays in a row now. It seems like we come in kind of hot out of the gate on Monday, looking green. Vol gets annihilated. We'll see if we could continue this script or if it's another one of these head fakes out there. Not a great weekend for the secret UVIX trade. Maybe we'll talk more about that on Friday with Dr. VIX. But S&P, as we're kicking off the show right now, up a little over 1%, about 1.06%. Dow up about 0.85%. NASDAQ getting the bit in its teeth, up 1.35%. S&P seems to be vacillating a lot around the 6,700 level as we're coming into the start of the show. As of showtime, we are just above it in the cash, but give it a few minutes, we might vacillate a little bit again. Right before showtime, VIX cash was at 24.25. That put it down about exactly 2 points from where it was on the Thursday show. As we were doing our little bit of a trivia challenge, looks like it ticked up a little bit to about 24.5. So that puts it down, obviously, about 1.75 points. VVIX at about a 120 when we kicked off the show, down 7 points. But let's go out, since we got no winners out there today. Let's go out to the Rock Lobster first. Mr. Rock Lobster, a lot going on out there in the markets, a lot of geopolitical concerns, a lot of eyeballs on Nvidia after the bell today. So a lot of things to keep an eye on. But what's catching your eye in a green start to the week, sir?
Yeah. I think the biggest one is, by the way, this is all the Persian Gulf. It's all the Straits of Hormuz. It's all what's going on with the latest Ayatollah. Is he in
Is it
Russia?
all
Is
about
he
the country of
alive?
Beirut? Are
Huh?
we all excited about the country of Beirut?
The country of Beirut is, and sadly that, like, Lebanon, Beirut used to be the Paris of the Middle East, right? I know it's hard to believe in the 60s and 70s, and then when the PLO moved in there and took over the southern part of the country, it just became a very volatile place. Let's put it that way. But right now, I think people rightly is there going to be oil? Is there going to be oil? Emerging markets have been getting kind of smacked around because everybody fears their energy prices are going higher. Today is a big rebound. If you want to really see what the tone of the market is, take a look at emerging markets, EEM. I think it's kind of a buying opportunity here. Certainly worth, I think, a nibble or two down here, Korea, Taiwan, and how this all goes. So, yeah, from what it appears, there's something flowing through the Straits of Hormuz. You can tell when we rally because people think there is oil going through. And I think all the activity is centered around Karg Island and how much oil Iran will be able to produce, and how that all goes down. I mean, the U.S. takes it over. I don't think they have any intention of blowing up all the infrastructure because then they wouldn't pump any oil. So they don't want to do that. I think they want to take the island over, and then Iran's basically can't export anything. And then I think the war's over. So if you look at it, if you read strategic talking head stuff, would I tend to do that a little bit. That's kind of what it is. And it will be a very fast war because the country will have no ability to make any money, basically. And that will be it. So how that goes is, I think, how this whole thing plays out. And we're still in the midst of it. And the longest periods of backwardation in VIX have gone over 60 days. I believe there's 3 of those. Of course, I don't have my favorite guest. Not that Tosaw is not my favorite guest host, but my next favorite guest host would be Russell, because you can always just tap him for something and he'll have that stat for you in like 2 seconds.
We need a Dr. Vix to sub in and give us the historical verification of that, sir.
Yeah, but I think I stole those from him anyway. So there's been, I think, three periods of 60 days or more where VIX was backwards. I'd say at least 2, maybe 3. Surprisingly, the longest one was the Euro crisis. Leave it to those Europeans to make a mess. We made a pretty good one in the Great Financial Crisis, I have to say.
I was going to say, we made a pretty good mess here. We made a pretty good mess right now as well. I don't know if we could be throwing shade about making messes geopolitically.
True. There's true. I do believe that if this does work out well, there will be a peace dividend somewhat equivalent to post Cold War in 1989 when I first started trading. I remember those days. So again, one couple less geopolitical problems, and we'll see how it goes. Again, no idea how it's going to go down. I assume our armed forces try their best. They generally do a really great job, and we'll see how it goes. And we just sit here as spectators at this point, to be quite honest. But I think those are the biggest news. The second, I think there has been some credit market issues or people perceive because one equity fund, private credit, what was it, Blue Owl or Owl something or Owl Capital, or anyway, they weren't giving redemptions. Then maybe BlackRock wasn't giving redemptions, and then I think a third thing was Congress is not going to let corporations build rental houses, something along those lines. Leave it, and they called it the Make Housing Affordable Act. Of course, if we build less houses, then it would be less affordable. But apparently, you do not need to pass Economics 101 to be a congressman in the United States. Sadly, that is a true fact. So, but overall today, we're back to 6,700, and that's not 6,600. And things are looking, let's just call it a little brighter right now. I would say some light is starting to shine at the end of the tunnel. I'm not going to say, I think there's like a little pin, there's a little pin prick of light at the end of the tunnel.
You put on any nibbles, could be SVIX or any, VIX downside or any of your usual plays right now, sir?
I have to say, I just got filled buying some VIX puts in May. I'm not buying any more April. I have some April, but not very much. I mean, decent amount, but I actually started buying May. I bought the 16 puts for 17 cents, a little Lotto ticket, and I'm adding more of the 19s for about $1.15. So I think those, again, I'm going outside of the backwardation range. I don't, God forbid this goes, if this goes over 60 days, it'll be a total mess. But I did a little, I took the numbers and kind of came up with that. So stocks are holding up remarkably well considering the potential problems for oil supply and oil disruptions. And I bought some EM today in emerging markets. I'm like, okay. So you gotta, when things look ugly, you gotta buy a little something. And today's my buy a little something day.
I love it. You're already done with April. You're like, you know what? F April. I'm going out to May.
I'm not buying any more April puts. I own some and I hope they're worth money, but I have a feeling my long market deltas once again will pay me a lot more than my VIX puts will. So
you're gonna love our March 30s expiring in 2 days that everyone's loving right now in VIX. We'll get there in a second. First, to Uncle Mike Town we go. Mr. Uncle Mike, sir, what is catching your eye out there in a pretty green cabal day, sir?
Yeah, we're definitely the Bulls are back in town, that's for sure. And a lot of this, like last night, I think we were up like 30 points in the S&P futures, and so we are getting some movement. Actually, today, I mean, pre-market, we were up a good portion too. So that's something that's good to see. The other thing, we've had a little bit of a sell-off in bonds over the course of the last week, so we're getting money starting to appear there, and then the main thing, like everyone's talking about right now, it's all about oil at this stage. With oil down a little bit today, money can appear again in stocks and bonds. So it's safe to come out now, money, if you will. That's kind of where it's looking like at this stage. In terms of the geopolitical events, if we I don't see how this can last more than a few weeks, just because of the fact that we're way bigger than they are, and eventually they're going to run out of bombs. We have more bombs than they do, and our missiles or whatever. We have more firepower than they do. With the Strait of Hormuz, we really don't get a lot of oil through there just because of the fact that we're making our own oil in America now. Like 10 or 15 years ago, I don't know if America would have had the luxury of being able to set up a situation like this, if you will, because of how dependent we were on Middle East oil, and that's just not the case anymore. And that's not even factoring in Venezuelan oil, because it sounds like we own that now too. It looks like I don't know, but I think that from America's standpoint, we are pretty oil self-sufficient in that, yeah, of course, we still import some, but we have our own. So I think that that's a bit of leverage in that America has that Iran doesn't. Also, if the Strait of Hormuz is blocked and certain people can't get through there, that's not going to make the rest of the world happy. And it kind of feels like we're pitting the rest of the world against Iran, which for America is good in this conflict. But I don't know. We'll see where it goes. The other thing that I'm seeing is silver and gold are relatively flat today. So we're staying at level. We're not getting a big jump in the precious metals. So maybe the market was in the metals market was predicting the craziness in the Persian Gulf a few months ago when silver was up around the 110 level and it's coming back to normal, so to speak. Who knows with that? But um, in terms of the only true news source around, a chart of the S&P 500, we haven't crashed yet. And so the fact that as of now, the S&P 500 is down only 2% on the year after being up ridiculous amounts. I believe the S&P has doubled since its lows in 2022. If I looked at my chart correctly, the fact that we're down 2% is really not that big of a deal. So I think that the market really doesn't seem to think that this is a big deal from a financial standpoint, at least not yet. So I don't either. Um, a couple of things that I'm also noticing with where we're looking, we do have small caps. The Russell 2000 is up over 1% on the day, so it decided to play nice and come along with the big market today. We also have the mid caps up roughly 1% as well. And then I gotta say it when it's bad news too. Unfortunately, Bitcoin is up on the day today, so I have to acknowledge that. But markets don't really think this is that big of a deal yet, and it hasn't shown it. Yes, we do have a 24 VIX, but the three of us have all lived through many 40 VIX times, and the market doesn't seem to think that this is one of those times. So that's what I'm seeing right now.
All right, Uncle Mike, as a bonus reward for you for your brave invoking of the country of Beirut, I'm going to try to rest my voice. I'm going to let you do my rundown of all the rest of the data here that I always do. You've heard me do it 7 million times. Think you can handle it, sir? Walk us through VIX and all the way through the indices and then the top 10 most active, sir. Think you can handle that?
I can give it a shot, but it's taking my document a moment to open on here. So maybe by the time that the music is done, I should be good.
All right. Well, there is no music, so it just starts.
You don't have any music before this? Why don't
No,
we have
this
any
is
music on this?
I don't usually play music for this portion. It's still the trading block. All right, I'll dive in.
I
Mr.
got
Rock
it.
Lobster, you want to steal? You want to snipe?
I got
Okay,
it,
Uncle
Mark.
Mike, you got it. All right, have at it. Impress us all.
Impress us all. I will see what I can do to live through the shadow of Mr. Mark Longo. All right. So, a couple things in terms of the most actives. Now, of course, my screen's freezing up. I apologize.
Do I have to say?
I'm having screen issues. I apologize.
Mr. Rock Lobster, can you tag in? Can you save your tag team partner?
I believe we start at number 10 is in the old days.
We do, but we also start with VIX first. So can you see the most active?
Okay. So we're gonna have some. The most active today. Okay.
You guys have only heard me do this 7 million times.
Okay, somebody after my own heart, but I think they're smoking the hopium. It looks like we have 19,000 of the May expiring in 2 days, 21 puts trading on the mid. So we got a little bit, somebody hope springs eternal on 21 vol. Also the May 24 calls. Maybe we have a little strangle action going there. 24,000 of those, 20,000 of those. VIX April 35 calls. Somebody, it looks like mostly on the ask, 25,000 of those. Those are what I would call some hopium disaster calls. We've got VIX March expiring Wednesday, 25 calls. A lot on, they're saying midpoint on these. Again, I think the 25 is a pretty interesting inflection call. It's basically lotto ticket. And then lastly, you have really extra lotto tickets. You have the 30 calls expiring Wednesday, 30,000. So that is the activity winner, is the pure hopium bowl smoking. On Friday, they looked like they had a chance because I remember that the 30-45 call spread was worth about 60 or 70 cents. And today it is worth about a quarter. So that is the overnight sadness call. VIX. So here we go. Oh, and then we have a little question here. Is this question real? Today's hot VIX option March 30 calls trade 18 cents. And the peeps are split 50-50 on that. 50,
what would you do, Andrew? Would you buy that call or would you sell that call, the 30 for 2 days out?
Again, I would sell it only in a spread because there are tire tracks on my back from selling naked VIX options. So I would sell it at a spread. I don't think we're going to see 30 again, to be honest. But again, all we need is one headline for a 30. It literally, any bad headline, and we could be 30 for a few minutes. I think settle there would be tough. But again, selling the calls for 18 cents, I got no interest in that.
I was surprised. Only 2 days to go. Half the audience so far wants to buy those bad boys. I was kind of surprised by that.
I think you buy the 18 call probably in the 24. I think you buy the 30 call and 24 put for a Lotto ticket spread, and just do a funky strangle there, lean a little short. I think you could settle 23 without too big of a problem. But that's, again, it's Lotto Ticketville on that one. I think the strangle for this week, the at the money straddle was, I think, $2. So it's probably pretty fairly priced there. It's like the news is either going to be terrible or great. And I think that's sort of the way it is. And in the meantime, we hover up or down $1 either way in the meantime. We're going to stick around the 24 handle, I think, until the news is actually good. Some ADV for all you total junkies out there. SPY, 7 million contracts, averaging 11.2 mil. SPX, 3.25 mil, averaging 5 million contracts a day. So pretty good volume today. IWM, 1.6, averaging 2.2. So again, midday, keeping up. And the Qs, 3.75, averaging 5.9. I'm going to say we're about average, maybe a little higher than normal. So there's some action today on a 1% up day with generally what I would see as positive news this weekend. As in the war is going and maybe Iran, it doesn't want to be such bad guys anymore. But we'll see what happens. Let's do some activity. So there's a couple surprises in here. Number 10, AMD, doing what it looks like 266,000 contracts today. I'm trying to look at the data. It's a little funky skewed here.
That is correct. 266.
That is correct. So is that trading more than normal? I got 149,000. I don't have the little thing he's telling me what the data is on there.
Just look at the first number. Make your life easy.
Okay, 56 calls and 117 and 44% puts. Is that correct? For AMD. So there's some call love there. MU, 300,000 contracts. Mostly calls, 179,000 calls versus 138,000 puts. Intel, which is a stock I don't even want to look at anymore, 323,000 calls today, 189,000 puts over calls over 135,000 puts. SOFI, why do they care about SOFI right now? SOFI number 7, 356,000 contracts, 233,000 calls over 123,000 puts. Microsoft, I guess they love it again. Microsoft, 359,000 contracts, calls beating puts about 2 to 1. Meta is actually ahead of Microsoft today. About the same ratio, 239,000 calls over 155,000 puts. Meta laying off a bunch of people. I believe in the stock rally like 20 this morning, and it's come off a little since then. Here's a surprise. Amazon, 411,000 contracts. And it's very funny here. All of the Mag 7 are all trading around 61, 62% call, about 37 to 39% put. All the Mag 7 is doing this, call versus put. And then Apple, 445,000 contracts. Again, about the same ratio, 67% calls, 33% puts. But Apple number 3, number 1 or number 2 is Nvidia, the company with the big, they're doing their big trade show, going to tell everybody how great AI is, and that all you can do is buy Nvidia chips. If you don't have them, you lose and you stink. They have 1.7 million contracts traded, 105, 1,050,000 calls, over 662,000 puts. Lastly, for some reason, I don't even know, why is Tesla number one? I guess it's always what, number one, number two. 1.08 million calls traded, over 705,000 puts traded. Tesla is number one by, a decent, it's close. Maybe by the end of the day, Nvidia catches them. And Tesla is it having a day for itself today? I haven't looked. You know what? Tesla's been so stuck at $400, I don't even look at it anymore. It's up $6. It just feels like an average day for Tesla. And that's basically, that is the rundown. Probably a little faster than Mr. Longo would do it. However, you get what you pay for here at the Option Insider Radio Network.
We give out sweet prizes, is all I'm going to say, to the winners. As it's time for us to give out some perhaps finger waving. We shall see. It is time, listeners, for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's get down to business. As I continue to play music, let's stop that. Southern Studio, putting up a fight. All right. Here we go, listeners. All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. And on days like today, where there really isn't a lot of wild flow, we actually go back in time. How wild is that? We fire up our own time machine. And today we're going back to the heady days of June 16th. Of last year. Who could even think back so far? Iran was merely a glimmer in the eyes of anyone out there. We were all just young and innocent, caught up in the madness of summertime. All was right with the world. And on that episode, June 16th episode, listeners, we talked about a call palooza in KE Holdings Inc. This is an ADR with the ticker symbol of BEKE, BEKE. And the stock at the time was trading $19.05. They've had quite a run since then. Let's see, they got as high, looks like, again, this was June of last year. So since that level, they've rallied. They got as high as, looks like, about almost 21 bucks in September, about 20 and a third. And well, before I keep going, let's break down what we spotted back on that wild June day, listeners. It was a little bit of longer term flow. It was Jan 21, so they had a full 6 months on this trade. Somebody came in with the stock again, 1905. They said Jan 21s, how are they? They got a $1.96 at 205, so a fairly tight market, all things considered, for 6-month calls in BEKE. They said, you know what? I will pay 205, 3,516 times, listeners. This is, by the way, a Chinese ADR, if you didn't know, listeners. And there were earnings coming up, but not for a while, not until August 11th. So obviously they bought a lot of duration. They bought the earnings cycle, and that also seems to be corresponding not that long before their peak for the year of close to 21 bucks in September. Then they came for it. They sold it down to about 16 bucks or so, 15.60 actually, in November. And then they tried rallying it, and the stock ended up closing on January expiration, $17.43. So a long way away from the 21 strike that they were buying for about $2, listeners. However, looks like these folks were not very patient at all. Whatever they were looking for this trade, wherever their catalyst was, because it wasn't earnings. Earnings were not until August. So they had about a month to go, actually 2 months ago until the earnings. So whatever they were looking for, they decided to get the heck out of Dodge just a few days later. And when they came in, this trade was, we first profiled it on the 16th. We could have come in on a show the week later and paid this one off because they came in and bailed on these 2 days later. They bailed on them for $1.50. So again, they spent about 205 for them, bailed on them for $1.50. The stock was about $19.20 or so on the day they put them on. When they took them off, the stock had dropped about $1. And apparently that was all she wrote for these people. They couldn't take any more pain. They bailed, and that was it. So they ended up dropping about 190 grand on the trade that we profiled. If they did more volume, obviously they lost more total on the day. But we profiled a 3,500 lot, and that one ended up costing them about 200 grand. Mr. Rock Lobster, what are your thoughts on BEKE and these people coming in for a long-term trade? They bought the Jans and then bailed on them in 2 days.
All I can think of is Beaker from Sesame Street.
The Muppets?
Yes, I feel like that should be their mascot, Beak. Well, considering the way these calls went, I think Beaker's an apt, he kind of wasn't he always kind of in a personal fast market the whole time?
He was always blowing something up, yes.
Yeah. Continue. And I believe that is a good metaphor for these calls. They look like at least they, you know what? But they're happy they sold them because the stock is trading $17 right now. So, hey, taking a $50 loss is a lot better than a $200 loss.
Yeah, sometimes it's better to get the heck out of Dodge. You're right. It's just strange. We don't see a lot of trades like that where they obviously buy a lot of duration and then something happened over the next 2 days to make them say, you know what? We are done. We are getting the heck out of Dodge. Beaker has exploded in our face for the last time. I like that, Beaker. All right, let's keep going out to July of last year, listeners. Again, the heady days of last summer. Who can remember back so far? This was July 21st of last year, listeners. We were talking about a name we've mentioned once or twice. They kind of had a wild year, which kind of belies the fact that they're a cement company. You'd think a cement company would be the definition of boring. Yet our old pal Cemex, ticker symbol CX, has had a pretty wild year, and they came on our radar again last July when the stock was $7.74. And somebody came in and said, again, longer term trade, Jan 9s. They said, Jan 9s, how are they? So not that far out of the money calls, all things considered, for this name. They got a market of 40 at 45. So again, another weirdly tight market. But I think they had been putting some on earlier in the day as well. So 40 at 45, they say, you know what? I like the cut of your jib. I will pay 45 cents, 5,323 times. They came back and did it again 5,000 times and so on and so forth. A total of 17,000 times on the day. Worth noting, they were buying the Jans, but this was probably an earnings trade because earnings were literally 3 days later. So there's no way they weren't looking at least at earnings when they came in to buy these calls. So interesting choice how much duration they bought. And you know what, Mr. Rock Lobster, I said it's been a wild year for this cement name. It was a wild trade for these calls. These worked out smashingly. The stock ended up closing $12.49, which is, by my math, listeners, well beyond the 9 strike that they bought for 45 cents. So they effectively made $3.04 past their break even of 9.45. So not a bad trade by, I think, anyone's calculations. Weirdly enough, these calls were all still open at expiration, so they never bailed on their Cemex. They were still riding this bad boy. So through expiration, this trade made about 3.1 million. That was just the trade, the paper we outlined. They did a total of 17,000. So they obviously made more on the total volume on the day. Now, that said, they left these open, so they obviously wanted some stock. If they're riding some stock, they're maybe not as happy right now because the stock has sold off since Jan expiration, and it is now down to $10.64. So they gave back pretty much almost $2 of the stock. So if they're still riding the stock, maybe they're not quite as happy right now as they were on Jan expiration. But all we can look at is the options flow. And Mr. Rock Lobster, Seems like they crushed it on these cement calls. What are your thoughts, sir?
Yeah, you know what's funny is Mark had a nice little winner on some CX calls, as I recall, and it might have even been part of this flow. Again, Mexico emerging market, they're hitting all the emerging market stocks because of oil prices. Last time I checked, Mexico pumped a lot of oil. So I think a lot of the infrastructure stocks, because of the war, have been sold off. I don't know. I think this would be a good option to purchase again, to be quite honest. 3 to 6 month time frame, 3 months maybe, but yeah, they clearly made some dough. I mean, how many times do you see a big winner like this in a $9 stock? It goes up 40%. That's you don't see that very often, especially like okay, think of all of the sectors that are going to move 40% in a few weeks. And Mexican cement makers.
Yeah, Mexican cement. I mean, we spent all our time talking about AI and everything else. All you need to do is go buy Mexican cement.
Yeah, like we're in the wrong space. We're in the wrong space. So clearly, somebody, they read the runes. They threw the bones properly to come up with those call purchases.
There you go, listeners. If you're tired of hearing about AI, and there you go. All you need to do is load up on Mexican cement calls that we profiled for you back in July of last year, and you'd be sitting pretty. But you know what, listeners? We're all sitting pretty on the Monday show because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, buddy, welcome to the Strategy Block, the portion of the show where Uncle Mike takes the reins, and more importantly, I get to rest my voice. So, Uncle Mike, what you got for us this week?
Well, it's going to be hard to top the excitement of the Mexican cement makers, and I have to say
that's a tough one. That's a tough act to follow.
When I woke up this morning, I was not expecting to even say the words Mexican cement maker all day today, but you never know what's going to happen on the old option block. You also never know what's going to happen in the markets. And so what I want to talk to everyone about today is strike price selection and creativity with covered calls. So this month, some of your stocks may have gone up, some of them may have gone down, some of them stayed the same, but it may have happened a little bit more than normal this month, depending on what stocks you are in, quite frankly. So I want to go through some ways with which you can be creative if you are looking to sell some covered calls for the following month. Maybe some of the calls you've already bought to close because they've been at a nickel or something like that. Maybe the stock's gone down a bunch, and maybe some of them you're holding out on till the end of the month, and you just never know. Everyone's in a different situation, but we do have another monthly cycle ending this week. I know with the weeklies, it's kind of a moot point, but if you are selling some covered calls on stocks that have a traditional monthly expiration, this might be the time to start mentally preparing as to what you want to do later this week or next week. So a couple of thoughts as to what you can do if you want to optimize your premium. Let's say that you are looking to get 1% per month from your covered calls, and you typically want to go out of the money, let's say. Well, on some of your stocks, you might not be able to do that this month because of the fact that the stocks have gone down. Of course, anyone who's traded covered calls knows that that's an issue that you're going to face just about every month. Not all stocks always go up all the time. However, there's ways with which you can work around this. A couple things are you can maybe look into selling half of what you would normally sell at the money and leaving the other half wide open. So in other words, let's say that you are looking to sell an out of the money covered call on 200 shares of stock. Maybe this month you can sell an at the money for the same premium as what the out of the monies would be, and then you have unlimited upside on one of them. That's one thing that you can do. We talked about that on a strategy block recently. Another thing with which you can do would be to sell a call spread. Now could be a time of considering something like that. We have higher implied volatility with the VIX right around the 24 level. And whenever you sell a call spread on a stock against a stock that you own, yes, you're still getting premium just like you would a covered call. However, you are getting unlimited upside should the stock just rip through everything. Now, of course, the disadvantage is that you don't get as much premium by doing that. In a time like this, something you may want to consider is selling a call spread because of the fact that maybe you're getting premium that you typically could get on selling a covered call, but now you're leaving yourself some upside room. That's another. Now would be the time to, in my opinion, that's something that I'll be looking at this week and next week for some of our April expiration strategies. Now, a final thing with which you can do is you can analyze the stocks. And when I say analyze, meaning look to see where you have some opportunity risk. Meaning, if you're looking at your basket of stocks and you feel that some stocks have a little bit more upside potential than others, then maybe don't sell covered calls on those stocks or sell fewer covered calls on those stocks and sell more covered calls on stocks that may have gone up a little bit or maybe tighten it up a little bit. So, in other words, one thing with which you could look at would be a way with which to optimize your covered calls by determining which stocks have the most potential to go higher. Perhaps sell less premium on those stocks or maybe further out of the money premium on those stocks. Stocks that have the most potential to stay the same, the ones that you are the most neutral on, if you will. Maybe on those stocks, one thing with which you could do is you could sell tighter premium, selling more at the money premium. The beauty of covered calls, in my opinion, to make it successful, as someone who's been selling covered calls since the dinosaurs roamed the earth, I'm convinced, is having diversification amongst your stocks. Trying to do all of your covered calls on just an index, it's difficult to do because if you get called away one month, then you got to get more money to redo the process the following month. When you're doing it on a basket of stocks, it typically works a little bit more clean, in my opinion, and that's what I've found through the years seems to work best, at least for me. So, once again, determining how bullish you are and how neutral you are can play a big factor in it and how you set up your covered call strikes for the following month. On another note, out of curiosity, we know what it means to be bullish, we know what it means to be bearish. Do we even have a word for being neutral-ish? Food for thought. If anyone in our audience has a word for that, maybe send Mark an email. We can talk about that on the show sometime. And that is the strategy block for today.
Neutral-ish. There we go. That's our word of the day, listeners, as we keep on going around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of the week until the Thursday episode of this show. As we're coming into the end of the show, it seems like we're hanging out pretty close to where we were at the start of the show. The Dow up about 0.75%, S&P up about 0.95%, and the NASDAQ up about 1.25%. So rally fading maybe ever so slightly. And the VIX cash hanging out right around 24.10, 24.15. So pretty much right within the ballpark of where it was at the start of the show. Mr. Rock Lobster, we'll start with you, sir. What are you keeping an eye on? Before we do that really quick, before we get there, let me just pay off really quickly. Our March 30s right now, our poll, it's going fast and furious, but right now 60% of you want to sell those calls for 18 cents with only 2 days to go. And 40% want to buy them. That makes a little bit more sense given how short the time frame is on those bad boys. Also, our question of the week right now is we're seeing a lot of red in the market lately, which raises the question, what, if anything, is causing you to lose sleep about this market right now? And of course, as always, write-ins are welcome. We said sky-high valuations, could be private credit concerns, could be geopolitical risk, or it could be nothing. You're still Uncle Mike Bullish. And right now, that is winning our poll. 44.4% of you are still Uncle Mike Bullish, nothing. is causing you to lose sleep at night, which is interesting. We got a tie for number two, 22.2% each between geopolitical risk and private credit concerns. Interestingly enough, sky high valuations coming in a distant third, only 11.1%. Mr. Rock Lobster, what, if anything, is keeping you up in the market right now? What are you keeping an eye on for the rest of the week?
Persian Gulf, I think that's the biggest thing. Hopefully it plays out well. Less terrorism. I'm going to say, it could be good for everybody. I would assume it would be good for everybody. So I think that's the biggest issue. But I think earnings are still pretty good. Overall, things are pretty good. Congress still useless, but they always are. So I'd like to say something nice about them one day. They just need to do something in order for us to say something nice about them. This week, I was just looking at Bloomberg. Do we have a little Fed speak this week? I think we do. I don't have any March VIX on, so I don't care. So it's and so that's kind of the deal there. But I think mostly almost everything is revolving around the Persian Gulf until things swing one way or the other. That would be my take on that. And as far as Option Pit, yeah, if you want to learn how to trade options, and you don't want Tosaw to do it for you, come to optionpit.com. We'll help you learn. Optionpit.com.
They want to go to Uncle Mike for those sweet, sweet Middle East geography lessons that we all covet. We all covet so much. Mr. Uncle Mike, sir, what are your thoughts? First off, that nearly half of our audience, 44.4%, are in the Uncle Mike, I'm still bullish camp. Kind of interesting. And then two, what are you keeping an eye on for the rest of the week?
That is kind of surprising that they are in that camp. I would not have predicted that. That's for sure. In terms of what I'm watching for the rest of the week, of course, we have the thing in Iran, if you will. The one thing that I have thought about frequently throughout this time is if the Iron Sheik was still around, he would get the leaders together and he would get this all settled if he was still around. But unfortunately, he is not.
You would put them all in the camel clutch and it would somehow work itself out, sir.
It really would. He could get that done. But with that, some other things with which I'm watching on the week. I think we need to continue to see how far the S&P goes down. We're down roughly 2% on the day or on the year at this point. So we have not hit any more lows. We do have the Fed. I believe they have an announcement this week, if I'm not mistaken. So we're going to see if things will change there. I do remember last week the president was lobbying very much for the Fed to cut rates significantly right now. But him being the low interest rate kind of guy that he is, that's really not surprising. So we'll have to see how that plays out. And continuing to watch the slippery stuff, seeing if oil can slide back to the levels with which it was before.
All right. That music means that is going to do it for us on the old OB today. Before we go, Mr. Uncle Mike, sir, where should folks go if they want more Uncle Mike goodness or to discuss Middle Eastern geography?
Well, everybody makes mistakes now and then. But with that, go to stcharleswealth.com if you are looking to work with a financial advisor who has 20 years experience in the option field and is happy to work with any of our listeners. Book an appointment with me and stay tuned to my YouTube channel. Definitely, I have a very long video that's going to be coming out hopefully in the next couple weeks. It's being edited and being made to look fancy as we speak. Hopefully we can get that out there over the course of the next few weeks. It's going to be on sequence of return risk and how covered calls can help work with that. Very excited.
Very exciting. Check them out, stcharleswealth.com if you too would like to learn more. And of course, while you're checking things out, check out our friends over there at Tasty Trade, tastytrade.com/podcast, the place to go to kick the tires and light the fires. That is going to do it for us on the old OB today, but not going to do it for us on the network today. Of course, if you're hanging out in the live, you get a special treat. We're going to go straight into crypto right after the old OB. I don't think my voice could take an hour hiatus in between. We just got to get it in and get her done, as they say. So stay tuned if you're listening live for a little bit of the old crypto rundown. If you're listening after the fact, just hit next on your device of choice, and crypto should be waiting for you there after the closing bell today with the hot options report. Then we're back again from the Southern studio tomorrow for a little bit of European action, heading out to the Eurozone. We'll see what's lighting up the tape on the European market brief tomorrow. Then I'll be back in the Chi-Town studio for all of our Wednesday shows, and then back in Chicago for the Thursday episode of the Option Block. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.